Hi, in this video we will walk through some of the example usage scenarios and some of the insights that can be derived from this tool on home and rental price market analysis. Here we have the Zillow Home Value Index plotted, which is a percent difference year on year change for each area. We can select all the areas here to see how the overall outlook for US is. I can also zoom out with my middle scroll wheel, and I can select the span function here to somewhat center the map on the screen. So from here we can see the overall outlook for US is looking positive. I can also select a particular search range, for example, to see if any areas are showing a decline in home values. And we see some pockets distributed throughout US which are showing decline. Now in this map, we have the population change of each state in the top, and bottom half represents the rental price change of each state year on year, as well as the zip code level breakdown. For example, in Idaho, we see 2.1% population increase and a rental increase of 3.3%. Whereas for North Dakota, which is showing almost flatline population change, we see around 4.2% decline. So there seems to be some correlation between the population change as well as the rental price changes. We can also select any state here and get a more drill down of its zip codes. Now this map over here represents the Zillow Home Value Index forecast for next year. Case in point here is Seattle, and we can see its distribution throughout the area. We can also select the slider here and restrict it to show the areas only which are showing the highest amount of growth. So for example, Renton here is showing 13.3% increase for next year. And if I select that, I can see its past performance for Zillow Home Value Index, its compounded growth rate, as well as its month-wise difference in percent. Now, if somebody is trying to buy a house in an area or thinking of just renting out a place, this map is helpful. So for example, in New York, we can see that it's showing a break-even time of greater than 7 years. And if we select this area, we can drill down into its zip codes and see if there are any interesting pockets. So we see almost all of the areas are showing break-even time of greater than 10 years. So if somebody is staying in New York for 7 years, it would just make sense for them to rent a place instead of buying a house. Now in this map, we are trying to estimate the affordability of an area based on some assumptions about down payment, mortgage, as well as the annual interest rate. Case in point here is, for example, Pennsylvania. For a monthly mortgage payment of, let's say, 2,500, we can see all the areas in blue are affordable, and anything in red is out of range, needs a higher mortgage payment. Now this map here shows the variation of days on Zillow of property for each state on an average. For example, in Florida, we see a flat line, meaning there are no sweet spots to buy throughout the year. Whereas in Maine, we see a lot of variation, and so a time like February or March would be really good time to bargain for a property since it has been on Zillow for a long time. Now in this last phase, we are estimating the dynamics between buyers and sellers. The case in point here is, for example, the Philadelphia, Camden, Wilmington area. So if we select a city level breakdown, we can see the region split by state, region type, as well as the region. And we see a scatter plot here which shows a strongly sellers market in red, and areas in green are strongly buyers market. So a place like this, areas covered in this lasso cut will show a good balance of sellers and buyers and would allow some opportunity for bargaining. We hope this video was helpful, and so will the tool be. Thank you.